We want to get now a broader perspective on the market and where it's heading from an investor who called the market crash in 1987, the tech downturn in 2000, and the stock market bottom in 2009. Marc Faber is the editor of the Gloom, Boom, and Doom report and founder of his own investment advisory firm. He joins us now from Zurich. Marc, pleasure to have you back on Street Smart. Let me start out by asking you about the State of the Union address. We are going to hear from the president on what he's done in the past couple of years and what he has really ahead of him. And I want to ask you, with the political constraints in mind that the president has to deal with, what you think of the job he's done and what you think he needs to do from here.
Well, if you want me to be honest, I think he's done a horrible job, and I think that will continue. I think he's basically a dishonest person, intellectually dishonest, and nothing has changed.
Why do you think he's intellectually dishonest? Why do you say that? And I mean, keeping in mind that he is a politician,
first of all,
so you've got to compare him relative to other politicians, right?
Yes, but some politicians are more honest than others. I don't think that I have a very high regard for politicians. I have a high regard for businessmen and for people who work, and not for people who abuse the system continuously. And in comparison to actually other politicians, I think that he came in on a platform as a president that would want to change the government in Washington, and actually has made it worse.
Hey, but Mark, to be fair, he came in at a time when we were smack in the middle of a financial crisis, and it was tough to really change the system. You laugh, but he came in at a tough time. Maybe now he's going to start changing the system.
Yes, you are an optimist. Keep on dreaming.
No,
we foreigners, we just laugh. We just laugh about someone like Mr. Obama.
What should he be doing, Mark?
For us foreigners.
What should he be doing? And I mean, compared to the previous president, I mean, George Bush wasn't the favorite of foreigners either.
Well, I was very critical of Mr. Bush, but at least he had one line, and he stuck to that line, and at least he set out to do a thing, and he was relatively straight on that thing that he did. He may have been wrong, and I criticized him very frequently, but at least he didn't change his mind continuously and didn't prostitute himself.
So, Mark, just before break, you said one thing you liked about George Bush is that he had one line out there, he stuck to it. What should be the one line that you think President Obama should put out there and stick to, that you think would be a good thing right now?
Well, basically, I think what should happen in the U.S. is for a president to tell the U.S., you have to tighten your belts. We have to go through hard times for 5 years to repair the damage that was committed over 25 years by the Federal Reserve, by the Treasury, by the politicians. And somebody has to tell the truth. But the politicians keep on fueling an illusion that you can spend yourself out of the misery, and that by printing money you will improve the economy, which is not the case. So let's change the subject from politics to actually economics and to investment markets, because in 3 days I have to go to the United States. I don't want to be hassled at the border.
You know what, we'll keep it on the economy, but in Washington, still the Federal Reserve kicking off its two-day meeting here, Mark. You know, I know in the past you've called for Ben Bernanke's resignation and you've criticized strongly quantitative easing. Keeping in mind, keeping it in the realm of the possible, because clearly the chairman is not going to step down, what would you like to see the Federal Reserve to do going forward?
Well, you don't know. Maybe he will resign. Maybe after he will see the disaster he's created, he may resign, or he may be disposed. Who knows? But all I want to say is basically, in terms of investments, right now, we have a very interesting situation, because for the last 2 years, from the March lows in 2009, the emerging market universe has performed fantastically well. and the industrial commodities have done fantastically well.
Right.
And the U.S. has underperformed everything, basically. And now we have a change where I think for a while the U.S. may outperform, may not go up, but it may go down less than emerging markets.
So you would advise investors, Mark, at this point to invest in the U.S., but at the same time, let me go back to December, because you told Bloomberg News, you said U.S. Treasuries longer term are suicidal investment. You caused quite a stir in the blogosphere, if you will, on that statement. So help me out here. You're saying the U.S. will outperform, yet U.S. Treasuries are suicidal. Help me here.
Well, let me explain. First of all, in the longer run, for sure, U.S. Treasuries and most government bonds are a suicidal investment. But there's a shorter-term time frame. And I think for the next 3 months or so, we have a situation where stock markets have become very overbought, and emerging markets in January, most of them failed to make a new high above the November, December highs. And that is a negative sign. And recently, some of them have sold off very considerably. Plus, the Chinese market is giving you a signal that something is not right in the Chinese economy because it's going down. So my view would be you have to shift right now for the next 3 months out of emerging markets. They may correct 20–30% out of industrial commodities and into U.S. equities on a relative basis. They may not go up, but they may go down less than the others. And I think the sentiment just recently was very or overly optimistic about the inflation trade, commodities, equities, and so forth, and overly negative about treasury bonds. So treasury bonds right now are oversold. And as of tonight, I got a buy signal on U.S. treasuries, but not for the long term. I think it's a rally that may last 2 to 3 months.
Treasuries and equities. So you're saying U.S. Treasuries and equities is the place to be right now, Mark, at least for the short term?
Well, I think treasuries are the best place for the next 10 days and probably for the next 3 months, as is the U.S. dollar. But equities in the U.S. will outperform emerging markets because they may go down less than the emerging markets. I think a correction is coming in the order of 10% on the S&P and 30%, 20% in emerging markets.
Hey, Mark, you're there in Zurich, not very far from Davos. As you know, the World Economic Forum underway, world leaders, economists, smart thinkers. Are you going to Davos?
Well, I'm not sure the thinkers are in Davos. I think it's a group of liars and people that go along with the system and perpetuate fraud and abuse and dubious practices in the financial system.
You say that, but Mark, a lot of the economic data that's coming out is better than it was. The IMF coming out today, raising its estimates for global growth. Things are better than they certainly were a couple of years ago. How is that fraud?
Well, I would say if you print money and you have huge fiscal deficits, it would be horrible if the data isn't any better than it is now. So we have a cracker boom, and I wrote about this. The question is, how sustainable is it? And how healthy is it? It's not a boom that is driven by capital spending and savings and, say, factors that lead to sustainable growth. It's all money printing and fiscal deficits. And one day, the burden of these deficits will have to be paid by someone, either through inflation or through essentially much higher interest payments on the government debt. And this will be borne by your children.
I wonder, Mark.
All I can say, I'm in Switzerland. When I grew up, it took 5 Swiss francs to buy a US dollar. Today, it takes 95 cents to buy a US dollar. So tell me, please, where the progress is.
Let me ask you, Mark, a lot of, obviously, people agree with what you say. I think especially our viewers tend to be fairly Austrian. But where do you think the policy response has been correct, if anywhere? Do you think governments that have embraced austerity, such as in the UK, have made the correct decision, or has it been wrong across the globe?
Well, I think if I look at the last 25 years, the mistake started in the 1990s, the bailout of the SNLs, the bailout of the tequila crisis, and then especially LTCM and so forth, and then the printing of money after the breakdown of the Nasdaq in 2000. It would have been much better to take a recession in 2000. So the mistakes have happened over a very long period of time. Essentially, the economy has become a drug addict, and by injecting more drugs, you're not going to solve the problem. You have to put it into rehab.
Mark, 10 seconds. Matt and I are just saying we want to hear your thoughts on gold. You write about it in your newsletter. You do still like gold, correct?
You see no bubble.
Very quickly.
Yeah, I like gold, but I think it will go down for the time being. There's a correction, an ongoing correction.
Okay.
And from the top to the bottom, the correction could be 20%.
Wow. All right, Marc Faber, always good to get time with you. You be well. Marc Faber, everybody.
Thank you so much.